Order filled.
Alright, what's good everyone? Welcome back to a new YouTube video. In this YouTube video, we'll be breaking down exactly how I, Fearing, have made my first 5 figures in a single day on my Tradovate Live accounts. You can see here that a few different executions. The first execution was my classic entry model. The type of trade you guys see me always take, my classic 4hr Po3 entry model. And we can see that it entirely played out. However, and that was about a 350 point TP. However, I had made a decision that had caused me to get out early as I added into it, then got an early break even, and we'll be breaking it all down. As always, show you guys proof, as we always do. Live account, Tradovate, $13,000 just about. And that was, again, when it comes to days like this, it's strictly business. We can't think about too much about P&L, points, any of that, because again, back to the original trade, a 350 point trade, that alone causes so many people to overthink. You cannot do that. You have to be focused and locked in on structure and what structure is giving us. As you can see here, you have to follow the same plan when you know price is offering you a 350 point TP compared to a 50 point TP. Structure is the same all around. The range is just get larger or smaller. So we have to remain emotionless, completely devoid, law of detachment, just be focused strictly on structure. And that's how we are able to make 5-figure days, by being completely detached. Now lastly, we can see that I had a pre-market long position. I had taken a loss, then back fought by a win. It was initially a data high scout that I was taking, and ultimately I was going to TP at the high of the day, which, you know, funny enough, did in fact end up hitting, but my trailed stop got hit break even. Could have left at the low, which it never was at the low, but nonetheless ended up hitting where I was expecting price to draw to before selling off. But before wasting any more of you guys' time, we'll show you guys the trade recording and then do an in-depth breakdown after that, so you guys can know exactly what my thought process was between all of these trades. I'll catch you guys after that. So hopefully you guys enjoyed that trade recording. Now we're going to get into the top-down analysis for the trade. So first thing we want to do is reference what I've been talking about in my public higher time frame analysis. So I posted last week that within our yearly Power 3 development, we obviously know that price had been grinding up higher in a slow, choppy trend higher. A little bit boring, but all of a sudden, out of nowhere, we got massive displacement lower last week on Friday, where we had a massive, how many points was this again? 1,600 points lower in a single daily candle. That then gave us a weekly CISD, where then we can look at what we're possibly doing. Below, we had our previous year's sell side delivery, where we can see right here, we start the sell side delivery, we deliver buy side, where price does not overlap right here. That is what is unbalanced out, or that is what is unbalanced. Now it just so happens that EQ of the entire yearly range also happens to align with that. And we also have a monthly unmitigated imbalance aligning perfectly at that level as well. So we're thinking potentially, after again grinding higher for a few weeks, no retracement, that we're now potentially putting in that retracement to rebalance the range below before we can continue the trend higher. That's logical and makes sense. So that was our overall mindset going into this week. We're then going into this week. We open up right here on Monday. Monday opens up, manipulates higher. We'll go back to Monday. Monday open right here. And I'll put on my little highlighter so you guys can see. Weekly open. So weekly opens, expands higher, aka manipulates higher. It's clear manipulation because we have no manipulation underneath the opening price, no expansion underneath the opening price, classifying that as our weekly doubles mark. So price expands higher, and then this expansion then forms this daily imbalance. Back here, daily imbalance at the end of that expansion. Where am I again? Hold on, I got a little bit lost there. Yeah, weekly open right here, expands higher, forms a daily imbalance. So following day runs out that imbalance. Update interval. Okay, I don't know why it's so slow. Okay, whatever. We'll get our replay mode for now. So weekly open expands higher, daily imbalance forms. We run out, we run into that daily imbalance. We're running out this internal structure high. That then forms SMT with our previous day high. So now we have SMT with a previous day high inside of that daily imbalance, inside of OT of this expansion range. From there, we displace lower. That then brings us to today, where we'll go back to market open. This brings us to today, where today we can see that at the lows, we had engineer liquidity, or I guess we could say relative equal lows. Now there is SMC with the previous day low down here, but generally that's just classified as relative equal lows, as we want to see NQ put in the manipulation and see NQ continue lower to the discounted points of interest. So we overall had a naturally bearish bias. We obviously delivered from OT of this range after forming SMC with a previous day high up here. Expand lower again, giving us a new range to draw into. Within OT of this range, we left behind an unmitigated session high, where I posted in my pre-market analysis. Now this one is for the private group. My pre-market analysis, I wanted to see exactly what I posted. I wanted to see price manipulate open at higher, run out the session high, and then expand lower. And so that was the overall idea going into open. Manipulate higher within the 30-minute Power 3, expand lower. Now, I'm not going to go into depth on the pre-market long I had taken, but it was generally based off of the idea that we would go higher before lower. And what had supported that on a more shorter time frame was the fact that we had, again, remember PPI was today, quickly reference that. We had PPI today, 830. 830 left behind an unmitigated data high. So initially I was longing in anticipation that no matter what, we would run up the data high, but then expecting price to run a little bit higher after that. So that's why I had partial up there at the data high, and then just left a single contract that I left for the high of the day. Just for, not really for fun, but more or less just expecting price to put in that manipulation. And guess what? We did exactly that. Unfortunately, I got in break evens on this contract beforehand. So that is what I was overall expecting going into pre-market, going into New York Open. And we can see New York Opens right here at 9:30, manipulates down, forms relative equal lows down here, which again supported a bearish narrative, which as we know later on is what I had ended up taking profit at. So price enters liquidity at the lows as we put in relative equal lows, and then expands higher. In this expansion higher, we run out that anticipated drawn liquidity, this session high, form SMT with that session high. We can see over here ES puts in a failure swing, and then from there, while still trading within OT of this range, we then run out the previous 15-minute high. We're running out the session high, and specifically that is after 10 a.m. had opened up. And what do we know about 10 a.m.? 10 a.m. is a new power 3 right here, or actually right here. 10 a.m. opens up, manipulates higher. So what does this give us? No manipulation beneath our 10 a.m. open, clear clear bearish 4-hour power 3 development. So we had no manipulation underneath our opening price, giving us a very dead obvious bearish narrative. So then do that and that. And from there, all I had done was enter off the very next CRSD. Price manipulates or expands lower. CRSD, I had entered off of, was it right here? I believe I had entered off of the 5th and 2nd. It was one or the other. It was the 5th and 2nd, yeah. Got filled generally around here. Just about a 50-point stop loss. TP at low. That was the initial plan, and this should have been the only trade I'd taken within the New York session. However, as we know, I'd added into the position. So I TP'd at the low that was formed right before 10 a.m. when it opened, just because that was about 100 points. And, you know, I'm very grateful to be able to take such a large profit in such a short amount of time. So I'm obviously going to do that, lock in profit, and just let my last contract run for the drawn liquidity. And that should have been the only thing that was taken today. And it logically would have been. But due to the decision to add it into the position back here, I ultimately had ended up removing that position, unfortunately. So we can see right here, I'm not going to go and draw out everything, but we can see that after price had retraced back into OTE of this range, traced back in, or I guess not OT, we just missed OT, back into premium of this range, ran out this internal structure high, displaced lower, 5th and 2nd CISD. I pretty much just had to enter off of that. And as we saw in the recording, I had gone break even after we started to displace lower. My break even was around here, and unfortunately I got to break evens where we then retraced a little bit higher. Now going break even was the smart choice there, as I left my stop loss at this high. I would have been stopped out, and that would have screwed me over a little bit, but it all worked out then. But I ended up taking another losing position after that, just because initially I saw that, okay, I got stopped to break even here, and then we immediately started to dig lower again. That had ultimately just messed with my mind, because we were holding, it's unfortunate, didn't really need to be taken, but it's pretty much, I had gotten break evens. So what, I went break even around here. Or well, let's go back. My position average was like around here. I got some break evens, and then again we wick it, and immediately start to displace lower. I'm like, crap, did I really just do that? Did I really just go break even that early? And then all of a sudden we're starting to play out, and there wasn't too valid of an entry model for my model. It's more or less just entering off the fact that we were holding every single bearish PD ray, and just had simply entered off of, well, just entered off a price action, you could say. And it's unfortunate because I was really convinced we are going to keep going lower, and I knew that I didn't need to add into the position, but ended up taking a quick loss there, giving back a little bit of profit. Oh, well, pretty much just giving back the profit that I had made on the trade back here. Oh, not all of it, but almost all of it. Whereas we then expand higher, get a 3-drive pattern with this internal structure while tapping in OTE, so we run less high. So first drive, second drive, third drive, 3-drive pattern for those who trade ICT or more or less basic ICT. You guys know how that operates. Run out this internal structure high again, and then immediately start to displace lower. Now, I wasn't too interested in entering right away, mainly due to the fact that we lacked the proper SMT, lower time frame cracks and collations that I use to validate an entry. But after we had displaced lower and then continuing to displace lower, I had then convinced myself to enter off of, again, price action. If we look back at the last few days, or I guess most of the price action this week, we can take note of the fact that just traditional ICT has been performing very, very well seeing very little SMT at all. Like, if you look at today's Thursday, if you look at Wednesday and Tuesday's price action, we delivered so well without any with very minimal SMT. Maybe it was Monday and Tuesday, but point is that we lacked SMT yet still delivering. So pretty much the last trade that I taken was based off of these little cracks and collations at the 1 minute highs. Not properly what I look for, mainly just based off classic ICT. Little crack and collation over this 1 minute high up here with a YM, and enter off of the 15-second CRZ that I occurred right here. Put my stop loss at this high, which was very high risk, almost got stopped out, but ultimately ended up playing out. So again, when it comes to my entry, it's pretty much just based off of the 1 minute crack and collation that we formed at the high, anticipating this 1 minute imbalance to be a breakaway. 1 minute crack and collation at the highs, 15-second TRSD, stop loss at the most recent swing high, and just let my position run. Now I had gone and trimmed at the true day open. I turned on my indicator. I trimmed at the true day open, just for those who are wondering. And the final TP was the low all the way down here. Now initially I had my TP2 at this low, TP3 at this low, but then I was just thinking, as price was starting to displace lower aggressively, nearly hitting my TP, I'm just thinking I might as well just hold everything, have a clean recording, hold everything until the external low, as there's a good chance, since they are literally right next to each other, there's a good chance we're gonna run both of them out no matter what. And I took that risk and ended up playing out in my favor. So that overall summarizes today's trades, how I made my first 5-figure day on my live account, and yeah, also explains my overall higher time frame narrative right now. So when it comes to higher time frame narrative, what we should expect price to be doing right now is delivering from down close candles. So keep in mind, currently in a daily sell model, we had a daily CISD, daily and weekly CISD, I should be specific, minus CISD, daily imbalance, SMT with these internal structure highs, pre-say high up here, displace lower, up close candle acting as resistance, acting as an order block, and we should expect price to be doing the exact same thing here. So this should act as a future order block, which once we close below, displace below, it will act as that, but obviously still needs to be confirmed. But in my opinion, that's what we're doing right now. We still have entry liquidity at the lows. We want to expect prices going to continue down into there, but just want to give a quick update on what I'm expecting on a higher time frame. But hope you guys enjoyed, learned something, and I'll catch you guys all in the next video.